Pleasure to be here, everybody. You know I love gold and the Yukon because I'm not able to watch my favorite team play for a spot in the Super Bowl right now because I'm speaking. But I think this is a worthwhile moment in time, and it's an important moment in time, and we're going to get into that through sort of a chart journey. You know, I want to start off by saying the last time I was at this conference in January 2020, the world was about to change. In fact, it was changing. We just didn't know how much it was changing at that time. And I feel like this is sort of another one of those moments, hopefully not in the same way as Q1 2020, but it is an important moment in time, and the gold market is definitely telling us something. So let's get into it. Forward-looking statements, the usual stuff. Towards the end of this conversation, I'm going to talk a little bit about 6 different companies focused in the Yukon. You can assume that I have either owned them, I do own them, or I may own them in the future, and I may also sell them at any time, as well. So, not investment advice, and assume I don't really know what I'm talking about either. So let's talk about gold. Gold is one of my favorite topics. It's a main focus for me. And one of the big drivers of the gold market is central bank purchases. In fact, you can see this chart. Central banks are net buyers of gold on a regular basis over the last 12 years. In fact, they've only been net sellers on a couple of rare occasions in the last 12 years, and only small net sellers. Now you can see to the right of the chart, there's been a huge acceleration in central bank gold purchases in 2022. In fact, when I flip forward to some of the gold charts, we're going to see how China and their purchases helped to put in a major bottom for gold last year in September, October. It seemed like the world was ending, the Fed was super hawkish, the dollar was really strong, and China just kept loading up at $16.25 an ounce and put in this really important bottom, which I think was a major washout low, which has now set the stage for what we're experiencing now and what we could experience over the coming months and years. So this is a chart not so easy to see, but you can see in the bottom right there, China really accelerated its gold purchases in Q3 of last year. And central bank purchases of gold is one of the key underpinnings of the long-term secular gold bull market. Every time that the gold price drops, whatever it is, 10%, 15%, central banks, it could be Saudi Arabia, it could be Turkey, it could be Russia, it could be China. They're accumulating on those dips and soaking up gold supply, which makes it much easier to rally. And I do want to mention one thing, on this slide. Central banks buy gold, not silver. And there's a lot of conversation in recent weeks that silver is showing a bearish divergence from gold. It's not moving above $24 an ounce, so that's a sell signal for precious metals. I don't agree. I mean, silver is a different metal. Obviously, they are correlated to some extent, a pretty large extent, but it's not a perfect correlation. And as I said, central banks and large investors buy gold, not silver. Now this chart is really interesting. It needs a little explanation, not so easy to understand at first sight, but simply put, gold does very well when the yield curve inverts. And specifically, when the 2-year Treasury note yield drops under the federal funds rate, like we've had happen in the last month or so. So the Fed funds rate is currently roughly 4.5%. The yield on the 2-year Treasury note is 4.2%, and most of the yield curve is inverted. Only the front month, like 3-month bills, are above the Fed funds rate. Basically, the front end is pricing in one more rate hike, possibly 2 from the Fed. The Fed meets, next week, so we'll probably get a 1/4 point hike at that point, and that might be their last one, quite frankly. But this chart is very interesting because what it shows you is in 2000, summer of 2000, summer of 2006, and April 2019, we had this same inversion, and a recession was 1 year away or less than 1 year away each one of those times. And specifically in 2019, when that inversion happened, that was a tremendous time to buy gold. You could have bought gold at about $1,270 an ounce there in May of 2019, and the price obviously was on its way to above $2,000 an ounce over the next 16 months or so, right? And so, if the history is any guide, this is a pretty powerful leading indicator. When the yield curve gets inverted like this, it's signaling the economy is weakening, the Fed is about to pause, not pivot, but a pivot might be coming later in the year. And this chart shows the 2s-10s curve is deeply inverted, and it's been deeply inverted since last summer. When we see this kind of deep inversion where the 10-year yield is so far down, well under the 2-year yield. In fact, it's like 3.5% on the 10-year right now, and the 2 years at 4.2%. It is a pretty strong indicator that a recession is on its way. Is it different this time? Well, I don't know. I guess we'll find out. But this has a pretty good track record. So those are all key aspects of the gold market right now, and the setup for gold in the near term has a lot to do with the Fed is going to what the Fed is going to do. But de-dollarization, which is a big theme that is actually picking up steam right now. And some of these points are from Zoltan Pozsar, and I really liked his report that he published in early January. And basically, he's making the case for there needs to be a shift in how portfolios are managed and the allocation of those portfolios. So it's no longer 60-40 with 60% bonds and 40% stocks. It's 20-40-20-20 with 20% commodities, with gold being a portion of that 20% allocation. And I would assert that most large investors, pension funds, sovereign wealth funds, have little to no gold exposure right now. So we can talk all we want about retail sentiment or whatever, but in reality, the gold market is so big that for it to be moved in a big way, it needs to be moved by big money, large hedge funds, sovereign wealth funds, pension funds, and I think they are underinvested in gold, period. So if he's right in this assertion that we're seeing a sea change in portfolio allocation, the 2040, 2020, that's pretty bullish for gold. So yeah, he says there's 3 types of gold. There's yellow gold, black gold, and white gold. But we only care about the yellow gold here in this conversation. De-dollarization. What is de-dollarization? Well, it's basically a bifurcation of the world between West and East. Countries like Russia, China, Turkey, Saudi Arabia do not want to be subject to the US dollar as the reserve currency, where the US government can seize their assets, freeze their assets, tell them what to do. They want to have sovereignty, and they want to have sovereignty over their wealth, their assets, and their currencies. And accumulating gold is a key aspect of their currencies getting de-dollarized, and there being a bipolar world. We're seeing that with Russia. Everybody can have their opinion on what's happening there. Obviously, we never want war. It's a terrible thing that's happening there. But the reality is that what is happening is having big impacts on global financial markets. And the fact that Russia is being forced to get off the dollar. They have no choice, and they're diversifying into gold. So de-dollarization is a massive theme, and I think we've just sort of touched the cusp of this theme. And it's going to take time to play out. The dollar will not be dethroned overnight. The US is still extremely powerful, a very large economy, but it's most likely, and I'm saying this as an American, on its way down. So this is gold charts, gold technicals. This is a daily chart, and just in orange, just very simply, that's a triple bottom. And that's, at the start of the conversation, I was talking about China and central bank buying. I think central banks had a big hand in that bottom being put in place at the end of last year. I feel like that was a capitulation, washout. I saw such terrible sentiment in the mining sector and among gold investors. It got so bad that people who I consider gold bugs were bearish on gold in October. Okay, so this was a real sentiment washout. And look at what's happened since. We've had a $300 an ounce rally. And I'm going to talk a little bit about the short-term setup, but I want to point out that obviously gold is very affected by the dollar index and by yield. So on the bottom, I have the correlation between gold and the US dollar. It's a negative 91% correlation. And on the top, I have the correlation between gold and the 10-year note. It's a negative 87% correlation. So obviously, what's happening with bond yields and the dollar have a big impact on the gold price. I know there's a lot of people that want to say, oh, it's the COMEX is doing this and that. No, actually, there's a bunch of algorithms that are just doing, like an arbitrage trade from the dollar index and bond yields and, real interest rates. So if yields, 10-year note yields start to rise again, that will be a bull sign for the US dollar, and it will be a bearish thing for gold in the near term. And if yields keep falling, the dollar gets weaker, that will be very positive for the gold price in dollar terms. So this is the monthly chart, and this is really important because a lot of people can look at this chart and they can say, well, that's a double top at $2,090 an ounce or thereabouts, and that's a big top. But that's a super obvious thing to see on the chart. Everybody can see that, and I don't think there's a huge amount of value in pointing that out. I think what's more important, quite frankly, is the bottom that was put in place at the end of last year, the turn higher that we're seeing now, and some of these technical indicators. On the top, I have the relative strength index, which is breaking out of a downtrend, and this is on the monthly time frame. So this is a big deal in my mind. And the MACD is crossing over. And you can see at the bottom that MACD indicator, when it crossed over in April, May of 2019, it was at the start of a very, very big move higher. So if this actually happens again, I think that is a very, very positive sign. But most people will want to see a monthly close above 1985. Who knows, it might happen in the next couple days, probably not. But I'd actually rather this take some time and we get a monthly close above 1985 and above 2000, maybe in April or May or June. Some consolidation here in the near term would be quite healthy from a technical vantage point. So far my presentation has been pretty positive on gold, and obviously I do like the chart on multiple time frames, but let's talk about potential downsides here. And as we approach a Fed announcement on Wednesday, it's very interesting to note that the last time the Fed spoke was about 6 weeks ago. Gold was trading around 1,800 an ounce at that time, and they raised rates a half point. They haven't had, an announcement since then, even though a bunch of Fed speakers have done speeches and stuff. They haven't actually had an official announcement. Well, gold has had a big move, over $100 an ounce since the time that the Fed last made an announcement. So a risk in the near term would be that the Fed says something that is not as dovish as the market is anticipating, that they sort of pour cold water on the pause idea and say that we need to keep hiking rates. I personally don't think they're going to go more than a couple more times, at a quarter point each, but anything is possible, and that is absolutely a risk. If the Fed tightens a bit too much, it would be very negative for gold, because what it would do is most likely push the yield curve up and flatten it, at a much higher level, and that would cause a rally in the dollar, which would be a negative for the gold price in dollar terms. From my experience as a trader and watching, this market for the last 20 years, the price action I've seen across markets in the last few weeks, in my mind, is indicative of a pause is coming. Some big money has caught wind that Powell's about to wave the white flag and really slow it down and see how things pan out over the next, let's say, 5 to 6 months. But obviously, There could be a sell the news event, in a few days, because obviously a lot of people may have gotten in front of this news. And from a technical vantage point, clearly there's a layer of price, memory between 1950 and 2000. It's going to take some time to work through that. I doubt that we're going to just go from 1930 to over 2000 in a straight line. It would, like as I said at the start of the conversation, I think it would be healthy for some digestion and consolidation here around 1900. And then, from a sentiment standpoint, I did this little thing on Twitter, earlier, and probably a lot of the people that follow me there have a positive outlook on gold. So generally, they would be, bullish and more optimistic on the gold price. But literally, there's like 230 votes now, and it's split down the middle. Are we going to go back to test the mid-1800s, or are we going to go to 2000 first? So I don't get the sense that sentiment is over bullish or too frothy right now. A lot of sentiment gauges that I monitor are bullish, like on a scale of 1 to 10, they're like a 7, but we're not at a 9 or a 10 yet, not something that would be characteristic of a major price top. So what does this bull market in gold mean for the Yukon? Sort of, one of the points of being here, in this area. Well, the Yukon previously was thought to be this kind of faraway place, really hard to explore there. You have to use a helicopter to get everywhere. Well, there's been some big infrastructure improvements and technological advancements in the last decade, and a pro-mining environment have helped to generate some big new, gold finds there in the last several years. And I want to talk about a few of those companies that have made those, new discoveries. I think that it's really important that the Yukon does it different. When you go on the Yukon mining tour, it's a very win-win sort of atmosphere. Clearly, all stakeholders are participating in the process, and everybody wants to do what's good and do good while doing good. So let's take a look at some of the big wins in the Yukon mining sector. I won't say gold because you can see at the bottom there's a copper gold play, and then there's a zinc with some silver play. But Snowline really sort of takes it away, plus 1,600%. I kind of cherry pick these returns from the 2020 or 2021 lows to their recent peak. So that's not totally what somebody would expect, but all these stocks have had big gains of 2x, 3x, 4x, in the last several years. So Snowline plus 1,600%, Banyan plus 1,500%, and Western Copper and Gold plus 500%, and Fireweed Metals plus 300%. So shareholders have done well in the Yukon, especially if they pick the right companies. Snowline, big new, discovery, including a drill hole, 2.3 grams per ton over 282.9 meters at the Rogue project. That was announced on August 24th. Clearly, they are drilling out something that is world-class there. Banyan Gold, 1.13 grams per ton gold over almost 90 meters. That was announced a few months ago. And then stepping out 2,000 meters to the east of the Powerline deposit. And Banyan is on track for a resource update of 6 to 7 million ounces, probably June of this year, and they'll be back with 4 rigs about a month from now. And obviously that one has had a massive move from the 2019-2020 lows to the recent highs above 50 cents a share, and well cashed up now. So for sort of a Yukon seasonal trade, there's this tendency for the Yukon stocks to put in a low in March and April every year, a tradable low, and then rally for 5 or 6 months as they go out to drill, and anticipation builds for the results. I'm running out of time here, but you can see the list: White Gold, and then Eagle Plains, Fireweed, and VGCX, the largest gold mine in the history of the Yukon, on the way to 200,000 ounces of gold per year. And just some charts. So White Gold put in a double bottom in Q4 of last year. It started to move up, and it has key support around the 40 cent level. That's when I would look to get into in March or April for the seasonal trade. And then Eagle Plains, very nice basing pattern, starting to move up, 10 million cash in the treasury, and they're gonna spin out a royalty company in May or June of this year. Fireweed Metals, big investment from a big mining family, and a great chart setup with a lot of news flow, including a PA, this year, and then VGCX double bottom, 50% rally in January of this year. So gold was up like 10%, and Victoria went 5x the gold price. So very, very correlated to the gold price. If gold pulls back, you could expect this stock to pull back, but if gold keeps going, this one has a lot of room to go, especially if they make that 200,000 ounce per year mark. Thank you very much for your time. I appreciate your attention.